Alright, welcome back everybody to another video on the After Hours channel. For those of you that don't know, my name is Anthony. I'm a long-term investor with a passion for money, stocks, and personal finance. On this channel, I'll be sharing my insights and experiences as I track the performance of my dividend portfolio. I believe in the power of long-term investing and want to show you what it's like to be a long-term investor in today's market. Whether you're just starting out on your investing journey or you're a seasoned pro, I hope to provide valuable information and resources that will help you make informed decisions about your money and investments. Join me as I share investment strategies, discuss current market trends, and provide tips and tricks for managing your personal finances. Subscribe to stay up to date with the latest from the After Hours channel, and let's build our wealth together. So let's kick this video off. As you guys can see on your screen right here, this is my dividend portfolio, and yes, this is real money. As for the returns of today, portfolio is sitting at 0.13%, or I am up $152. This is going to be episode 5 of Road to 1 Million. If you're unfamiliar with what that is, I'm going to be tracking this portfolio that you see on your screen right here all the way to $1 million, and I'm going to show you every step of the way. You'll be able to see my trades, which are weekly, my dividends in a 6-figure portfolio, and also a heads up on the companies that I'll be buying in the future. For this video, we're going to be covering a few different things. So we're going to start off with the full portfolio update. So I'll walk you guys through that. You got a glimpse in the beginning. Secondly, we're going to jump into my recent buys. I have no sells as of right now. Thirdly, we're going to take a look at the snowball effects of compounding returns, which I think is going to be extremely interesting for you guys, so I advise you to stick around. Fourth on the list, we're going to take a look at my upcoming or pending dividends. And lastly, we're going to end the series off with answering a subscriber's question. Without further ado, let's get into the video. So, as I mentioned, this is the portfolio update, currently sitting at $115,000. Market's in the green right now. Take a look at the 1 week view. You can see that the portfolio was up 4.38% or $4,800. Seeing this is obviously a good feeling. There are no doubts about it. But as I mentioned in a previous video, I want to remind you guys that these are normal fluctuations in the market. Whether the market is going up or it's going down, it is normal to see these spikes of 1%, 2%, or even 5%. Remember to keep your emotions in check, understand the companies that you own, and if you own high quality companies, there should be no worry when the market starts to go down, and if anything, it should present an opportunity for you to buy the same companies you would have bought before at a lower price. Taking a look at the 1 month view, we can see the portfolio is actually down 4.3%. or $5,200. Taking a look at the 3-month view, we can see that it paints an entirely different picture. The portfolio is up 8.2% or $8,757. The market, as many of you guys know, has been a struggle over the last couple months and quite frankly, over the last couple years. So it's nice to finally open my portfolio up and see that it's heading in the right direction. While I typically leave my emotions out of my investments, it's always good to see that what I have picked is actually working out. That being said, this may not be the case for you guys, and I do not want you to get discouraged. If you take one thing away from this video, let it be own high quality companies that return money to you as the shareholder, and you can't go wrong. Moving on, let's take a look at the next segment of this video, and that is going to be my recent buys. Coming in at number 1, I actually bought more Microsoft. I spoke about this holding in, I think, 3 of my past videos, and if you're unfamiliar, this is actually my largest holding in my portfolio. I have a ton of conviction in this company. I've looked at the financials over and over again, and in my personal opinion, I believe that Microsoft is going to outperform the market in the next 10 to 20 years. For that reason, I purchased $166 of Microsoft, and in return, I got 0.7 shares at a price target of $235. Next buy on the list, and that is Union Pacific. Union Pacific is another company that I've spoke of in previous videos, so if you want to take a look at that, you can click the link at the top of your screen right now. But as far as purchase goes, I bought $166 of Union Pacific, and in return, I got 0.7 shares at $215 per share. Last buy on the list, and that is going to be SCHG, not to be confused with SCH. This is Schwab's U.S. Large Cap Growth ETF and focuses on mainly large tech companies. I purchased $168 of SCHG In return, I received 2.9 shares at an average cost of $57 per share. If you guys have any questions about these recent holdings or want me to go in depth any farther, please let me know in the comment section down below. But with that being said, let's move into the next segment of this video. Next on the list, we're going to be taking a look at the snowball effect of compounding returns. Now, like many of you, I am a visual learner by trade, so I'm going to do this in a visual way so you can see the true power of compounding interest. Before we do that though, we're going to need some information to plug into our calculator. So as you can see on your screen right here, the stock market has returned an average of 10% per year over the last 50 years. That's going to come into play shortly. Now, as promised, we're going to be taking a look at a compound interest calculator. To fully understand the compound interest calculator, let's take a look at some of the criteria that we're going to be plugging in. Coming in at number 1, it says, how much do you have saved currently? I want you guys to disregard this. This is going to be used as the initial investment in a stock portfolio. The math is going to come out the same, so don't let that confuse you. Second on the list, we're going to look at how many years you've been invested. Third, we're going to look at the average rate of return. We have that set at 10 right now because of what we just looked at. The average return of the stock market has been around 10% over the last 50 years. And fourthly on the list, we're going to add how much we are going to contribute to this portfolio on a monthly basis. If we look at some quick numbers right now, if we invest an initial $1,000 over 20 years at a 10% return per year and add an additional $50 per month, we can see that our portfolio after 20 years would be $41,000. It's worth noting that only $13,000 of that would be your own money. The $28,000 remaining is all interest that you earned. Now, I thought it would only be right and transparent if I calculate how much I think I will have after 30 years of investing. So first on the list, I invested $15,000 to start off with. I'm still young, I'm in good health, so the likelihood of me investing for 30 years is pretty high, so we'll put 30 for that one. We'll keep it at 10% per year for an average, and as of right now, I invest roughly $4,000 per month. It's no secret, it's been on your screen the entire time. If I stay on this path that I'm currently on now, I am estimated to have $8.1 million at the end of 30 years. $1.4 million of this would be the money that I have contributed myself, and $6.7 million of it would be total interest earned. Now, using my portfolio as an example, let's turn that 10% to 11%, just 1% more, and you can see that I have an estimated return of $9.8 million. That is a substantial increase. Let's say I do extremely well over the next 30 years and I have a rate of return of 12% per year. We can see that that number jumps up to $12 million at the end of 30 years. This is only a minor glimpse in terms of the power of compounding interest. I wanted to make this video to not only show you guys my expected returns and give you something to look forward to in your own portfolios, but to push you in the right direction as far as investing goes. I'm going to leave a link to this calculator in the description below. I want you guys to plug in your own numbers and really see your estimated return over the course of 10 years, 20 years, 30 years, and in some cases, maybe 50 years. I'm excited to see what your estimated returns are. Let's say that I am an extremely good investor and I return 15% per year for 30 years. I would have an estimated $21.8 million. Only $1.4 million of that would be my own money contributed. The additional $20 million is total interest earned. This does not even begin to factor in dividends reinvested. I tried to find a calculator that would include that, but unfortunately I could not. So if anybody knows of a better one out there, let me know in the comment section down below. Without further ado, let's move on to my upcoming and pending dividends. Now, I have to be honest, this month is not as exciting as of right now. I only have one pending dividend coming in, and that is from JP Chase for $24.45. JP Morgan is a company that I've owned for quite a few years now in my portfolio. It's consistently paid decent sized dividends ever since. If you guys have any questions about the JP Morgan dividend or maybe some of the dividends that you see on your screen right now, let me know in the comment section and I can take a deeper look into them. With that being said, I just want to show you guys what it's like to be a dividend investor. These payments are all dividend payments which were reinvested right back in to my portfolio. This list of dividend payments goes back roughly 4 years and only continues to grow. If you guys want to see a video of me breaking down how much I've earned in dividends since I've started investing, I can also do that in the future as well. But without further ado, let's move on to the next segment of this video. Next segment of this video that we're going to be covering, and that is a subscriber's question. This is going to be a segment that I'm going to be including in all of my videos going forward. So if you have a pending question for me, or you want to get potentially one of your holdings analyzed, let me know in the comment section below and you may be included in my next video. Glenn says, thanks for the video. I recently bought BX and plan to buy BXSL. I would be interested in your analysis of them. Well, first off, thank you for the question, Glenn. I really appreciate it. I won't have time to get into BXSL, but we can take a look at BX, and I hope that answers some of your questions. Let's take a look at BX. This is Blackstone Group Incorporated, currently trading at $83, and we can see on the left of our screen right here, looks like they have a 22 PE with a forward PE of 14. BX has a Petrosky score of 6. If you're not familiar with what that is, I always cover it in my videos because it can be quite confusing. We'll take a look at that real quick. The Petrosky score is a number between 0 and 9 that ranks the quality of a company. The higher the number, the higher the quality of the company. The score is determined by assessing 9 different financial aspects of the company. The company is given 1 point for each of the 9 standards being met. The 9 financial aspects that they are referring to are right here on your screen. Feel free to take a screenshot, pause it, or zoom in to get a better look. Since this is a dividend portfolio, we obviously have to take a look at the dividend yield, and as we can see, it is 6.66. Now, I don't know if that's a sign, but this may be a company I'm going to stay away from. Before we move down to the good stuff, let's take a look at the balance section real quick. And as we can see, cash on hand, they have $3.4 billion. Debt, they have $10.5 billion. So they are negative $7 billion. Now, this may not necessarily be a bad thing. Let's take a look at the financials to make that determination. One thing I always like to take a look at, starting off if I'm going to look at any company, and that is going to be their revenue. It looks like it has been going up over time, but not a significant amount. Taking a look down here at the bottom, we can see that their revenue in the last year is negative almost 20%, and in the last 10 years it is up 5.2%. So that's going to be my first red flag for BX. If we take a look at the EBITDA, I don't think it resembles the revenue in my personal opinion. It almost looks like it plateaued or it's stagnant as of right now. If we take a look down here at the bottom, in the last year, their EBITDA is negative 28%. So I'm sorry to say this is going to be my second red flag for BX. Moving on to one of the most important financial aspects of any business, and that's going to be their free cash flow. Similar to the EBITDA, it looks like it's flat or it's plateaued, and some years we can see that they're actually losing money. Over the last year, their free cash flow is negative 4%, and over the last 5 years, their free cash flow is negative 4.8%. Let's take a look at their employee stock-based compensation to see if they're diluting shareholders. Factoring in employee stock-based compensation, we can see that they previously were diluting shareholders by paying their executives large stock-based compensation packages, but as of right now, it looks like they canceled that and they're no longer doing so. With that being said, free cash flow still looks pretty poor. That's going to be red flag number 3. Moving on to the dividends for BX, and we can see that they were increasing their dividend from 2011 to 2015, but then it plateaued. They raised it again in 2021, and they recently dropped their dividend in 2022. I like to own companies that have a consistent dividend. They increase it year after year, and there are not major fluctuations like I'm seeing on screen right now. I'm sorry, but this is going to be red flag number 4 for me. Moving on to their shares outstanding, and we can see that they are diluting shareholders. I know it's going up. That is not what you want to see when you're looking at this part of their financials. This means that they are continually issuing new shares, therefore diluting you as the shareholder. On to one of the most important aspects of a company's financials, and that is return on capital employed. If you guys are unfamiliar with what this means, essentially, if a company has a return on capital employed of, let's say, 10%, that means if the company invested $100, they would have received $110 in return. This signifies to us as the investor that that company knows how to invest their money and they can get money in return for said investments. If we take a look on screen right here, we can see that the return on capital employed for BX is actually in the negative by a lot. It's more in the negative than any other company I have seen in my past videos or analysis. Now, it looks like we don't have the data for anything past 2011. That may be an error on my end. So for this one, I'm going to give them a pass on the return on capital employed, and we'll just say that it was an error. But if 2007, 2008, and 2009 are right, this is not a company I would want to give my money to, because it signifies that they are just burning cash. Going back to Glenn's question, I hope that answered most of your concerns for Blackstone. Now, as I mentioned before I started, there may be aspects of this business that I don't fully understand. That was a quick overview, and I urge you to do your own research. With that being said, this is not a company that I would want to invest my money into. I think there's way better options out there with less volatility and less unpredictability. Thank you for the question again. I really appreciate it. This is going to conclude episode 5 of Road to 1 Million. If you have any questions about the topics that I covered today, maybe some of my holdings or the overview that I did of Blackstone, feel free to leave a comment down below. I get to every one of them. If you have any questions about potentially one of your holdings and you want me to do an overview like I just did for Glenn, leave the ticker symbol down below and I may include that in my next video. If you guys take anything away from this video, I want it to be the power of compound interest. Don't let people discourage you when they say you need a lot of money to invest. It's simply not true. As long as you have time on your side, you stay consistent, and you invest your money into high quality compounding companies, the likelihood of you seeing a return in the future is pretty high. With that being said, if you guys want to stay up to date with the companies that I'm buying in 2023, don't forget to subscribe, and I will see you in the next one. Take care.